All right, guys, so the cat's finally out of the bag. We got the delivery numbers for Q2 from Tesla and the production numbers, and their stock is going crazy, up over 9% on the day. And mind you, guys, yesterday the stock was up, I think, 5-6% on the day. So we're building off of that gain from yesterday, and now we're up pretty much 15% over the past 2 days. So we're going to break down the numbers here, my thoughts, and of course the charts, and go over whether or not I'm buying, am I selling, am I holding Tesla, am I staying away. We have a lot to cover, guys, so hit the like button, make sure to subscribe, and get up to 15 stocks for Moomoo with at least a $100 deposit. Use that link down below, the QR code right here, or go to StockSurfS.com/Moomoo, and your uninvested cash for a limited time will earn 8.1% APY. So guys, it's a no-brainer. Get on it. We'll talk more about it later. And with that being said, cheers. Let's dive into it. So like I said, Tesla's up over 9% on the day, pretty much up $20 per share. And you guys can see it's been on the up and up all day ever since around 9 a.m. on the East Coast when we got the delivery and the production numbers. So before we dive into the charts here, guys, which obviously we're breaking out, we'll talk about that, and I'll give you all my 2 cents here later in the video. Before we do that, though, let me pull up the actual numbers so we can break down what's going on here with Tesla, and we'll break down kind of some of the basic numbers, the market cap, what their earnings are projected to be like right now, which, by the way, their earnings are coming up in about 2 weeks. So Tesla reported 443,956 deliveries, you guys can see, in the second quarter, a 4.8% decrease from last year. So down pretty much 5% from last year. And coming down here a little bit more, the production numbers came in at, let's see, 410,831 vehicles, and it looks like here the analysts were expecting around 439,000, which we did beat that by about 4,000 to 5,000 deliveries, vehicles, which is good. That's probably one of the main reasons why the stock is doing what it's doing right now. And the total number of deliveries in the second quarter was down 5%, like I said, from last year's 466,000. You guys can see right here a year earlier, but it's actually up around 15% from last quarter. If you guys remember, Q1 deliveries for Tesla were not good. I think they were around 380, 390,000, right in that ballpark. So yes, year over year, we're down about 5% delivery-wise Q2, but quarter over quarter up about 15%. Pretty solid if you ask me, but obviously growth has completely halted. Demand is, waning a little bit here. We'll see how long that lasts. But overall, guys, in April, Tesla reported a drop of 8.5% year over year. Again, the first quarter deliveries were about 386,000. You can see right here. And that's not the best, right? That sent the stock down a bunch at that point in time. And I believe China's sales for June, I was reading, those were down about 24% year over year. So Tesla still is struggling big time in China, and they're currently offering a zero-interest loan as an incentive to get customers to buy a Model 3 or Model Y by July 31st over in China. And according to its 2023 annual filing, Tesla generated about $21.75 billion of its overall revenue from China, representing 22% of total sales, which, guys, that is not a small portion of sales. That's a big chunk of the sales. And again, from what I was reading, sales in China in June were down 24% year over year. Not the best sign from China. So they have to spark growth over in China again somehow, which is what they're trying to do now with the zero interest loan, which again is an incentive to get customers to buy a Model 3 or Model Y by July 31st. So that's the big news here, guys. And again, the stock's up big time as we got better delivery numbers than expected. But like I said, they're still down 5% year over year. And now Tesla's market cap is at around $730 billion, guys. And their trailing 12-month PE is right around 58. So they're trading 58 times earnings right now, which is pretty high in my opinion, considering as of now in real time, there is no growth. It's pretty much flat for the company. And let me see their forward PE, guys. It's actually going up. Their forward PE on Yahoo Finance right here. Let me zoom in a little bit. You guys see that trailing PE right here? 53. Oops, let me come down. It's glitching on me. 53. You guys see that? Their forward PE is 85, man. So that's actually coming up big time. Not the best sign, right? And in terms of financials, let me pull this up to show you guys how, yes, we have seen exploding growth since 2020. Nobody's denying that on the top line, but growth has significantly halted, slowed down rather, shall I say, at this point, and who knows when that will pick back up again with China struggling. There's a lot of competition over in China, no doubt about it. So that's kind of, a tough spot for the company right now. And as you guys know, they're set to report earnings on the 17th of July, which is in 2 weeks from now, roughly. And on average, they're looking to do 58 cents of earnings per share versus last year's 91 cents, according to Yahoo Finance. And you guys can see on the revenue side of things, average revenue $23.98 billion versus last year's 24.93. So their revenue, guys, year over year is projected to decline right now by about 4%, 3.8% to be exact, right? Which, again, is not a good sign. And the fact that they're trading at 55 times trailing earnings and their forward PE, man, is an 85 right now, that puts the company at a pretty high valuation for a company that's declining in revenues year over year. Not crapping on the company, guys, just keeping it real, right? And let me tell you, man, going back to the charts here, if they bomb earnings, which I'm not expecting the earnings to be very strong at all, and now that the stock's moving up like crazy into earnings, this could be setting up for a potential collapse if earnings disappoint, if guidance is terrible, right? Think about it. I mean, look, we're up from $138 to $228. We're up 63% off the recent lows. That's not, that's great if you're in the stock, right? You're making money, especially if you bought it on the dip here, but that's not the best setup into earnings, especially for an earnings report that's not projected to be good, right? Everybody knows that. So if they report bad guidance, right, whatever it may be, this could easily sell off, and this rally that we're seeing right now could easily be a bull trap, right? Which for me, guys, is why I'm not touching Tesla. I'm not in it, and I'm not looking to buy this rally. I don't think this rally, and I could be wrong, please do your own research, but based on my opinion, what I've gathered, I don't think this rally will have legs, right? I really don't. I think we're going to potentially sell off back to the low 200s, dare I say back under $200 per share. And mind you, guys, don't get too excited because, look, we're still trading in this downwards channel, and right now we're at the top of it. You guys see right here, boom, you guys see that, boom, you guys see that, boom, you guys see all these lower highs that have been made. Be very careful with where Tesla is right now. I'm not too confident, again, that this rally will have legs. In fact, if I was in it now as a trade, I would probably be locking in profits, right? That's just me. If I'm in it as a long-term investment, different story, right? If you have a 5, 10 plus year time horizon, you don't really care about this, right? But if you're a trader, if you're looking at the charts, man, and again, if I was in it, I would be running for the hills right now, locking in profits, because you know what? Nobody ever went broke locking in profits, right? So what do you guys think? Let me know your thoughts in the comments. Hit the like button. And before you click off, check out the Patreon down below for my private portfolio. I post updates every single week, and I just bought another stock today, guys. So check it out down below. And of course, make sure to get up to 15 stocks from Moomoo with at least a $100 deposit by using that link down below, the QR code right here, or by going to stocksurfs.com/Moomoo. And for a limited time, your uninvested cash will earn 8.1% APY, which, guys, it's a no-brainer. So again, get on it, use that link down below, and I'll catch you in the next one.